Pinterest stock is down over 65% off its high, and in this video, I'm going to argue why it's an excellent opportunity for long-term investors to buy this stock before 2025. I'm going to share with you my discounted cash flow valuation estimate of the price per share for Pinterest stock, the forward price to earnings multiple that also demonstrates why I feel the stock is undervalued, as well as looking at the company's critical financial metrics like revenue growth, cash flow from operations, and operating profitability. I'll also include Wall Street analyst estimates for free cash flow over the next several years for Pinterest. So let's take a look at why I think this is an excellent buy heading into 2025.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So as I highlighted, Pinterest stock is down over 65% off its highs it reached in 2021. Many stocks have yet to recover the highs that they reached in 2021. Remember, the stock market was in a bit of a frenzy in 2021. It's not so different now, as I feel some parts of the market are approaching frenzied enthusiasm, including cryptocurrency markets and some tech stocks and some potential AI winners in the future like Tesla and Palantir could be approaching overvalued territory. Still, let's focus on Pinterest in this video and why I believe this one is undervalued. Starting with the company's acceleration in growth. Lately, the company has recovered off the lows in 2023. You see here, it bottomed out in growth in 2023. This was due to people spending more time away from home, spending less time on their apps, on their computers, on their social media accounts, and spending more time traveling, watching movies away from home, going to concerts, etc. And that was not great for Pinterest. Now, in 2024, consumer behavior is normalizing and spending on these apps. Advertisers are looking to spend on these apps to encourage people to spend money at their businesses. 17.71% in revenue growth in the latest quarter is an excellent number for a company like Pinterest. More impressively, though, over the years since 2019, Pinterest has improved its cash flow from operations to sales number. At 28%, this is much better than the negative 6% the company had in this metric in 2019. The social media business model is an asset-light business model. The company generates revenue from people posting content on the platform. That's money that the company does not have to spend. It doesn't have to pay these people to create the content. The people are incentivized to create the content because of the followers they will gain and a potential share of the advertising revenue that those posts will generate, and how those posts might get people to go to those creators' pages and those creators' other social media accounts where those creators can generate revenue off the people engaging with their content. It's a win-win situation for Pinterest and creators on the platform. So the company's operating margin is also improving, but not to the level that the cash flow from operations is improving. Now you might be wondering, how can the cash flow from operations be so much better than the operating margin at 28% versus 3%? And the primary difference between those two metrics for Pinterest is stock-based compensation. Pinterest uses that to pay employees to incentivize them by paying them in shares of the business. That's basically what stock-based compensation is, giving employees a piece of the business instead of giving them money. And the company needs to account for that on the income statement as an expense. How much are those shares worth? And they have to deduct that from their revenue on the income statement. However, on the cash flow statement, the company adds that number back because that's not cash that's leaving the company. That's pieces of the company as compensation. So since it's not a cash expense, the company adds that back, and that's why the cash flow from operations is so much better than the operating profit margin. So now that we've looked at some of the critical metrics, let's look at the company's valuation metrics. I'll start with the forward price to earnings ratio of 17. This is the cheapest you've been able to buy Pinterest stock going all the way back to 2022. A forward price to earnings for a company that's growing revenue at 17%, but its forward PE is below 17, and a company that's increasing its profitability, increasing its cash flow from operations with an asset-light business model in the advertising industry that has a total addressable market of over $1 trillion and growing, I believe that's a bargain valuation. Now, this makes it even more of a bargain when you consider that the analysts on Wall Street expect Pinterest will increase its free cash flow from $950 million in 2024 all the way up to $2.21 billion in 2028. So the analysts on Wall Street expect that the company's free cash flow will more than double over the next several years, reaching $2.21 billion in 2028. So the forward PE multiple is one way to evaluate a company's valuation. Another way I like to evaluate a company's valuation is looking at the discounted cash flow model and the intrinsic value per share that this calculation delivers. Now, I recently did a discounted cash flow valuation for Pinterest on December 17th, 2024, and the intrinsic value per share I got from my calculation was $70.12. Now, if you compare that with the current market price of $31, it signals that the stock is undervalued, even if you allow for, and I always allow for, a margin of safety when I conduct these calculations, because there are so many estimates and assumptions that are utilized in this calculation. For instance, the weighted average cost of capital is an estimation and assumption. The growth rates, short term and long term, are estimates and assumptions that I've made. And so, to account for the fact that these estimates and assumptions can be off by a degree, I provide for a margin of safety. So, if I find that my intrinsic value is near 10 or 15% of the current market price, I won't make the conclusion that the stock is undervalued or overvalued. Instead, I'll make the conclusion that the stock is relatively fairly priced. But in this case, my intrinsic value per share is over twice that of the current market price. So even if I've made a few over assumptions or under assumptions, that still leaves plenty of margin of safety to conclude that the share price is undervalued. So, in conclusion, for all of these reasons, I feel that Pinterest stock is one that's undervalued, one that investors looking to set up their portfolio for 2025, this is one that I feel that you can add to your portfolio because it offers investors a good long-term reward versus risk. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.